Morning, everyone. I just wanted to send a quick video to talk a little bit about what's going on with both fixed and variable rate interest rates right now, okay? Both variable rate and fixed rate mortgages are kind of trending upwards. I want to be very clear. Variable rate mortgages increase when the Bank of Canada increases the overnight lending rate and the big banks increase their bank prime. That has not happened yet, but there are some predictions in the market from some big economists, like the economists at CIBC, that that could happen up to 8 times over the next couple of years. Okay. If that happened 8 times in the next couple of years, that would be a 2% increase to variable rates. Many of you that have variable rate mortgages currently have a mortgage rate around 1.5. Okay. That is prime, which is 2.45 less 1%. Be very clear that your differential, meaning less X percent, is not changing. The bank prime may change. So if it moved up 2% over the next 2 years, that would mean at the end of all of those increases, your actual mortgage rate would be about 3.5%. Today's fixed rates are between 2.5 and 3%. So if you are panicked and want to turn your variable rate mortgage into a fixed rate mortgage, the banks are going to offer you the opportunity to let go of your variable rate mortgage at 1.5 and fix it between 2.5 and 3. So that means you are going to increase your cost of borrowing by almost double today. You are not going to allow it to increase over the next 2 years. Okay. So when we look at that, we will see on January 26th, if the Bank of Canada increases their overnight lending rate one time by 0.25%, we will see many variable rate mortgage holders rush to lock in their mortgages because they are nervous. Okay. What I really, really want to stress is that your rate will slowly increase over time if our economy continues to recover. But if they raise the rate maybe only once or twice, so maybe 0.25 or 0.5%, your rate will level out there, maybe around 2%. Okay. Because if the economy stops growing, they will quit raising that overnight lending rate. Okay. They're only doing that because they're really wanting to temper inflation a little bit, but they don't want to stop economic growth. Okay. So I don't want there to be mass panic out there. I really want to get clear that this is not a panic situation, but it is important to understand that your rate is going to increase. Now, if you have a fixed rate mortgage, it is a different scenario. Your fixed rate is locked until the end of the term. If you are looking to get into a fixed rate mortgage, those rates are also increasing, and they are increasing because the 5-year Canada bond rates are increasing. Okay. That's what's affecting fixed rates. So that only affects you if you are looking to get a fixed rate mortgage in the future, or if you have a mortgage coming up for renewal in the future. Okay. You're going to want to look at early renewing it maybe so that you can lock in today's fixed rates versus future fixed rates. Okay. Those are two really different conversations. Neither of them are cause for panic. Certainly, there may be some questions that you need answered about your specific mortgage file. And I would just really encourage you to reach out and talk to myself or someone on our team, whoever you've been working with at Spire, so that you really have a firm understanding about what's going on. Okay. So all of our contact detail is in this email. If you have questions about it, please reach out. Don't just read the headlines and panic. Make sure you've got the answers that match your specific situation. Okay. You know where to find us. Thanks so much, everyone.